right? So if we come down to our calculator and we take 5 divided by 6 total trades, are you mad with an 83% winning rate? Or are you mad with your green 5 out of the last 6 days? I'm not. As a day trader, I just want to be consistently green. You know what I mean? So that's one of our day trading techniques, right? I also blessed you guys with this one inside TradingView. So you got your targets, the beast mode ceiling, the beast mode floor. You got your beast mode price target 1, price target 2. You come over here and look at this. It ended up breaking the floor right here, came up to our box, right to the cent, came all the way back down, pushed back down again, and there you get it. That was a real crappy day. Nothing you could do. That happens sometimes. But what do expert traders do? Expert traders stay consistent to their trading plan, and they trade the same setup over and over and over again. That is what expert traders do. So right here, it actually broke. It broke the ceiling just by a little bit. We take calls. In this example, there's 1 of 2 things you could do. If you take your calls here, which is valid, price ends up coming all the way back down. You have to sell out of your calls right here for puts. Then you grab puts, and then it comes right to your target to go risk-free. So if you bought 1 contract here, you could buy 2 contracts here. You just made all your money back. Or you could take 1 contract here and take 1 contract here, and your red day is going to be cut in half. You'd have a smaller red day. If you take same-day expiration, you might win. This might be a 40 or 50% winner, but this might be a 40 or 50 or 60% or 70% loser. If you do not like those losses or those type of winners, you then can take the following day expiration, and you might take a 10 or 20 or 30% winner with a 20 or 30% loser, right? So you come back over here the next day. Once again, let me see where this bad boy's at. Right here. Price broke the floor, hit our target, and each of these targets act as levels. It is not random that price broke through this, came up, and then ended up coming back down to this level, right? It got back above it. Look what happens. We come back up to this level. Failed here, we come back down to this level. So these levels also help you to understand that if we break this level, we're probably coming up to this level. If we break this level, we're probably coming up to this level. If we break this one, we're probably coming to this level. So it'll help you guys to hold the trades or trade it all day long if need be. Look at today. Today, it broke this level, failed, came right back up here, come to this level, failed, come back down, got underneath, fell all the way back down to this level. So it's like you can use it as added tools, almost like the fib levels, but you have measured move levels all day long, every day. Also, this works on any stock as well. Amazon, we wanted to take a floor break on Amazon today. Look what happened. You got a floor break here, came down and hit our target. You have retest alerts saying that if it pops back up and then falls back down, you'll get it. Here's a failed retest. Here's another retest, and price falls back down. You got another retest and another breakdown. You got another retest and another breakdown. So you can use this, and I bless you guys with this because you guys are all rock stars for the day traders, right? If you don't like day trading, that's totally fine. I got something else for you, right? That is our floor and ceiling tool. Watch these levels. If we get above PT 100, that is extremely bullish. And if we get below it down here, it's extremely bearish. So I consider these levels, like these outer band ones, highly probable reversing areas. So just keep those if you have, or just keep an eye on those levels, right? All right, that's the floor and ceiling. Everybody should be green this week off that. And now we're gonna go over the weekly hit list. Weekly hit list. We win these trades. We are pretty solid at it. Let me pull this up. You don't know where it's at. We got in DCG Discord server. Oops, I'm gonna move you back over here. You come here to the alerts tab. You go to the stocks and options. Every Sunday night, I will give you guys a weekly hit list. Weekly hit list right here. If you guys keep liking the weekly hit list, keep on thumbsing it up. I'm going to copy this and put this in the chat box, right? These weekly hit lists is meant to trade. You're meant to buy 2 weeks of expiration time, and you're looking for 10 to 30% ROI on every single one of these trades, and you'll have about an 85% win rate. So weekly hit list this week, a win. All right, right here was our breakout level. Right here, I put it. Was this a winner or was this not? This is a grand slam right here, right? This was the day. Where was it? That was 12:30. That actually, we wanted to see a breakout above. We wanted to see a breakout above this level right here, which we got on the first day. So you would actually taken this trade right at the open and never got stopped out. You'd be holding this trade for 2 days, and you'd be in this trade for a winner, right? That is a good
pulled
one.
out 125 on that one.
Hold on. What'd you say?
Pulled down 125 on that one.
Well, man, we got dinner on you then, girl. Let's go.
Let's go.
There you go. Stephanie, tell some of the new folks how consistent we are with the weekly hit list.
Oh man, I tell you, get them alerted for in the morning. If you start new, maybe, you know, pick out 2 puts, 2 calls to kind of not put yourself under any pressure, and go for it, because they pay out.
There you go. Just to put something in perspective, because I am a visual guy, weekly hit list, we said we buy 2 weeks of time, which now has 8 days left because some days went. So what you can do is you can put your line here, and you can go down to a 5-minute chart, see when it broke. It actually broke the first 5 minutes of the day. And maybe we'll do an in-depth training on this, maybe Tuesday. We'll get it lined up. We got the rest of the year. If you take this trade right here, use the previous day as your stop out. So because this gapped up, this really isn't a good example. So you would have entered this trade as soon as the market opened up, but your stop out would have been right here, right? So this is actually a wider move than normal. So when it opened, it was at $86 a share. So if you come here to the option chain and how you can build up confidence, if it was 86, you're probably going a little bit farther out of the money. You might take 86 depending on how much it costs, or you might take 87 or 88. Actually, you won't, because look at the open interest, right? It's tricking you. So if I come here and type in Control V, I can see how much this contract moved. Right here, you would have paid $280. They hit a high of 680 up there. So there was a max potential, which you're never going to get. $680 minus your cost entry of 280. We're just going to say 280. That right there is that's $400 ROI. So if you take $400 divided by your cost basis of 280, that's 142% ROI winner. Could you have at least got your 10 to 30% on there? Absolutely. So what happens is, like, you put a trail stop in on this day right here, and if it went straight up like it did, you would have never got stopped out till about right there. So realistically, you would have bought this trade right here where the line's at as soon as it opened up, and price went against you. And then the next day you held it because it did not hit the stop, and it went straight up from 300 to 680. And then if you put a 20 or 30 cent trail in, or whatever you wanted to, then you would have got stopped out right there. So you would have accurately got that. So that's a grand slam in my eyes, right? Next stock we got GILD, and we put a line here. Where was it? Our breakout line was going to be right here. This one broke on the same day, and it went from 85.87 to 86.47. That right there is an easy 10 to 30%. I know already by looking at it, because I've been doing this for a long time. But there you'd had 2 winners that you could have chosen from. Last one was LMT. LMT, I gave you this stock right. This was the night, so I wanted to break above this, and as you see, we never broke out above it, so we would have never got this this trade. So sometimes that happens. So on Sunday, I did not see this candle, or this candle. So what happens is since we're above extremely bullish, I'm looking for a break above this, which would have been the 100% fib level on Friday, which is the previous day, obviously, if I'm coming back on Sunday. and we never got a breakout to the upside. So I don't take this trade. Then on Monday, I take my alert from here and I'd come here because we'd still be bullish in my eyes, and we never pushed up. So this trade, unfortunately, never triggered. Nothing that we could do. So we're 2-0 on the calls. For the puts, we had Amazon, right? I gave you guys this stock right here on 12:30. We never poked to the downside, right? So then on Monday, which will be Tuesday, which will be this candle, I then put an alert at the end of the day for the next day right here. Price then opened up right here. It come all the way back down. 84.20 went down to 83.32. I know that a dollar move on Amazon with 2 weeks of time, well, I could show you right now. If you get a dollar move on 2 weeks of time of Amazon, you might spend $217, and you get a dollar move, you're making $50. That right there is about 22% ROI. Remember, I go in a risk-free trade after I get 10% ROI. I am not greedy. Why? Because we get weekly hit list stocks every single week. So if you can compound 10 to 30% on every single one of these trades and put a stop loss of 30 or 40% tops, you see how this will add up real fast. I'd say the average loss is about 20 or 25%. But if you feel comfortable having a hard stop in place, then you can put one at like 30 or 40%, and you're going to win a heck of a lot of them, right? So now, Win was a winner, Guild was a winner, LMT never triggered. So we're 2-0. Amazon was a winner. We are now 3-0. We can go to DG. I had this one on the hit list right here. What's this low? 88. Yep, it triggered right here. So we were looking for a break. This was Monday, which is actually Tuesday, because Monday was the observation. It broke right here, came in all the way back. Remember, on the day that it breaks, the previous day's high is where your stop out's at. Did we ever get stopped out? No, we didn't. This thing ended up gapping down and shaking and baking its way down here. Guess what? We just got another winner. So now we are 4-0 off this list, right? What's the last one we have? Microsoft, and you guys saw it. I'm not Mastradamus, right? But I'm very good at what I do. You know what I mean? You need to use proper risk management and stay consistent with it, and you're going to win with us, right? Microsoft, this was the Grand Slammer. Check this out. I gave you this breakdown right here. It never happened on Monday, or which will be Tuesday. I keep saying that. So Tuesday comes, right? This was Tuesday. We never broke, so I adjust my line. Wednesday comes and we broke down below it. Here we're taking our put. What happened in one day? So let's check this out. So Wednesday, we're taking this at 231. So we're probably taking the 225 puts, right? 225 puts, which is over here, which are not going to be this expensive because it went far in our favor. If we control V it, control V, that's like you buying a put on this was Tuesday, this was Wednesday. As soon as it opened up, it's like you buying a put for $227, and in one day it's going to $500.